and gentlemen, social media, Facebook, Instagram, TikTok, LinkedIn. How you feeling after the election? By the way, we're going to start the official training for the Distressed Asset Advantage funding edition. If you're looking to figure out how to get money lined up, funds to take down these beautiful, killer off-market commercial deals, you're in the right spot. We got a lot to cover today, but we're going to start officially in about a minute or two. And what I want to talk about first, though, just let me know your thoughts on the election. Do you still have a heartbeat? Can you breathe? Chris Strickland, are you there too? We'll chat with everybody on this.
I'm here, Nate. I'm here, Nate. I'll tell you what, I'll give you my thoughts on the election, and that is, guess what? Life goes on, right? No matter what side you fall down on or fall upon or whatever, guess what? We get to wake up every morning and we get to move forward and make this life a great one. So I love it.
Yeah, I was surprised. I caught a quick broadcast from the Nomad Capital, and he was basically coming on saying, oh, well, it didn't matter what happened. You should still move outside the United States. Even if your candidate got in or didn't get in, you should still, like, it's funny how like everyone's agenda is still their agenda. I know a lot of people, they like to make a show out of it and huff and puff if they didn't get what they wanted. But at the end of the day, we have a great country. We are so blessed. I feel like America is one of the blessed nations. And as long as we keep doing the right things, we're gonna keep pushing forward. We got a lot to look forward to the next few years.
100%, 100%. And it's still, I'm so looking forward to what happens in the marketplace. I still think we're in a fantastic place with what's going to be happening in real estate over the next few years and everything. And so, yeah, it's going to be really, really exciting.
Yeah. So speaking of which, we got a lot of friends joining us right now, Chris. So they all want to know what's going to happen in the next couple of years because we're at kind of a crossroads. We've seen this economy change a lot, maybe not so much in the single family home arena, but in the commercial arena, the last 2 years, this is like the waters have separated. If you were looking for that gap, that opportunity to get in there and grab something right now for specific commercial assets, we're talking about multifamily, office space, strip malls for commercial assets, the river is wide open. You can walk right through the middle and you won't get wet right now. So we're going to be talking about that today. We also have a little bit of post-election review to do. We're not going to go all political on you, I promise. We won't. We'll save that for a different episode. But we do need to talk about some of the policies that are coming down the pipeline because things are going to change a little bit. We had one administration that was in for the last 4 years, and now there's a change of the guard. And so let's talk about that for just a little bit here. And then we're going to jump into funding for killer off-market commercial deals. So I just want to get a quick sense. Let us know in the chat. By the way, the more you engage in the chat, the more apt you are to win a prize. I've got a couple of books. I know Chris has got a book he's giving away today too, but I geek out. I read a lot of books. I've got Tax-Free Wealth. This is a classic, one of my favorites. Tom Wheelwright wrote this one, CPA, award-winning CPA. I got another one here, Steven Siebold. The reason that we're going to give books away today for the people that play full out is because if you remember back in the day of school, they taught you sit down and be quiet. Studies show that learning style doesn't lead to retention. You don't learn it long-term. You might memorize it short-term, but long-term, it drifts from your brain. If you want to remember more than 70% of what you learn, then the real secret is active participation. So practice with me in the chat. Use that thing. If you're able to come on camera, come on camera. You're twice as likely to win a book today if you're on camera with us and you play full out in the chat. If you can't because you're driving or you're at work, we understand, but you're twice as likely to win a book today if you are on camera and playing full out in the chat. Okay. So Chris, you're manning the book thing, right? Like when we got a winner?
Absolutely.
Okay, so what's going to happen when you win a book, we'll tell you right from here, and Chris will send you a link. You'll fill out the link with your name and shipping address, and we'll ship the book directly to your house from Amazon. Okay. Everybody ready? Just say yes in the chat. If you're ready, you know the rules. We're going to make this trading fun. You're going to learn a lot. We could talk about a little bit of the politics stuff, at least how it's going to affect our taxes and economics in the near future. And we're talking about funding killer commercial real estate deals. Yeah. All right, Ryan. All right, Tracy. All right, Scheller. All right, Jeff. We got Scotts. We got Lori. Let's do this. Okay. So I'm going to come over here and we'll share some slides. I just want to talk a little bit about the economic policies and some tax policies that are about to shift. In case you've never met us before, welcome. We appreciate having you. We've been in this game for a long time, the investment game. We buy a lot of real estate, multifamily assets, and we buy industrial assets. We've won a bunch of awards, all that kind of stuff, but that's not why you're here today. I'm not going to get into that. If you want to Google us, you can Google us. What I'm going to get into today is killer deals, specifically killer commercial deals. The image you see on your screen right here, this is a deal that we had a blessed opportunity to buy just a few weeks ago. We found this one, put it under contract, inspected it, did all the due diligence. We had investors jump forward. They gave us $3.5 million. Some of our money's in the deal too. And we closed on it immediately. This one, the seller had paid $5.7 million for it 2 years before us. Imagine that. Just 2 years ago, sold for $5.7 million. It's worth every penny of it. And we just picked it up for less than 3.5. It was 3.3 and some change. So incredible opportunities are popping up right now if you know how to go after it. So if you are down to create generational wealth that produces a positive ripple around the world, then stay tuned because we're going to talk about this deal. We're going to talk about a lot more. I have to give a quick legal disclaimer. Chris and myself, we're not CPAs. We're not financial advisors. We can't give you specific advice to you. You need like tax professionals and whatnot if you're going to implement the things that we're going to teach. But we're going to teach you things from our knowledge. We are active real estate investors ourselves, and we'll be going through what we're doing and how we work with our professionals. Always seek professional help before you make an investment decision of any kind. So 2 things, election results and Fed Reserve. If you don't know what Fed Reserve is, it's this entity that basically distinguishes what the interest rates are for the United States of America. Most countries around the world, they have their own version of it. Chris, they're meeting tomorrow, right?
Thursday. Yeah, I think it is tomorrow.
Tomorrow. They intentionally staged this next meeting to be a couple days. Usually it's on a Wednesday, but this time they're meeting right after the election, 2 days after the election. So it'll be interesting to see what comes out of it. We have gone through the data. We have downloaded 75 years of data and what their rates do to the housing market and the commercial market. So we're going to pull up, we won't bore you through all of it, but we're going to pull out what's important on that. What's important right now is that when the Federal Reserve took a position 2 years ago to increase rates, that drove commercial real estate values down as a whole by 37.5%. Okay. If you look at it sector by sector, the one that we're in the most heavily is the multifamily apartment sector. That's down right now by about 30%. Office space is kind of the category king leader, anywhere from 35 to 50%, depending on the city that we're talking about. So that's what kind of last 2 years looked like. And you could literally go out all the way up through this year and you could find deals like this. This is a deal in New York, an office tower sold for $332 million back in 2006. It just sold for $8.5 million. Just so I know you're with me, type 8.5 in the chat for me. $8.5 million. This is a real deal. You can look this up. It's on tax records. My jaw dropped when I saw it. $332 million down to $8.5 million just a couple months ago now. You got BlackRock, the world's largest landlord, coming out now saying that this is the time to invest. And it's because of deals like that. Here's another one. This property in Washington, D.C. sold for $613 million about a decade ago, a little bit more than a decade ago. It just sold this year for $323 million, almost half price. This is what the market's doing right now in commercial real estate because of those interest rates. Okay. Another one.
Can I interrupt you for 1 second on that one?
Please.
So what amazes me on that one that you just showed, the slide right before, is you think about what was happening in 2011, 2012. You and I were in the market at that point. That was supposedly the bottom of the market at that point, right? After the 2007, 8 crash, and everything. 2011, 2012 was kind of when things bottomed out. And so it's pretty amazing that thing sold for 600 million in 2011. And yet you fast forward to right now, this housing boom that's supposedly happening, or real estate boom, and it sells for half of that. So that just shows you it's a really, really great example of what is happening in multifamily as we speak right now.
You nailed it, Chris. I'm just going to skip ahead. I could show you deals like this all day, like literally all day, the deals that are happening right now. We're playing this game, by the way. We bought this one for 492. We cleaned it up a little bit. We sold it for 1.7. We'll come back to that in a little bit, but we're playing this game, but we're in this weird sector of the market where single families are still hanging on pretty high and commercial values are down. Now, I know a lot of people, when we talk about commercial, some people get excited, some people get a little bit scared because they're bigger. What Chris and I are going to do is, he's so humble, he won't say this out loud, but I'm going to say it anyways. Chris has completed over 1,600 real estate deals. Super humble guy, keeps a very level head on his shoulders. And we're going to go through and break down today how we're funding deals like this, how we're funding, but funding is the main focal point. But when you have a window like this in history where you can pick up deals like this, you really might want to consider running after it. I jokingly texted a few people this morning and I said, I'm lacing up my running shoes because the administration just changed hands and I know what's going to happen. And we're going to go through that right now. With this presidential administration changing, the Senate changing, and more than likely the House of Representatives changing, it looks like it's going to be a clean sweep for this administration. And the policies that are probably going to come out of it are as follows. Number one, you guys remember the last time that Trump was in office, they deregulated, they cut regulations, and they were trying to stimulate economic growth. We expect to see more of that. As real estate investors, we're counting on it, and it's been promised on the campaign trail over and over again. And most of the time, if he's got an administration that all lines up, he's able to get things like that done. So whether you're red or blue, doesn't matter to me. Chris and I started this whole broadcast by talking about, like, it doesn't matter, like, life goes on. What we ought to do right now is unite upon the principles that are going to make us wealthy, not just for us, but for our kids, for the causes that we care about. So we want to unite around those facts. So the fact that we believe is true here is that there will be less regulation, there will be more economic growth. One of the big milestones that they passed during their last administration is this whole thing called accelerated depreciation. Chris, you want to talk about, like, what real estate investors get out of tax benefits for a second?
Yeah, I'll touch on it. So basically, in the past, you could take any asset that you purchased, and, long-term rental, and you could depreciate that asset over, 27 and a half years or something along those lines. And so it was great, but it took you a long time. You had to hold on to that asset for quite some time in order to really see the benefits of the taxes there. That being said, now with accelerated depreciation, which was, as you said, passed back during the last Trump presidency, last administration, he accelerated that depreciation, which means that you can take the bulk of that depreciation up front in just the first handful of years that you own the property. And so by doing that, you get all the tax write-offs, the benefits of the tax write-offs, it's front loaded toward the front end of your ownership of that property and everything. And so it is a big, big boom to those of us that are looking for any kind of tax relief and things like that. So fantastic. And that was unfortunately set to expire coming up. And so it's actually been, they've been chipping away at the percentages of that, but it was set to expire. It was only put into place for a number of years, and it was set to expire. That being said, again, not trying to get into politics here, but President Trump mentioned as early as just 3 or 4 days ago, I heard him say out of his own mouth that he plans, as long as he had both Senate and the House, he plans to renew that and make it permanent. So that is something that's super exciting for us as investors.
Chris, you nailed it. And here's what most people don't understand. When you invest in real estate, the IRS gives you tax breaks. They don't call them tax breaks. They don't call them tax credits. I got a 10-year-old boy. That's how I explained it to him. But they do call it accelerated depreciation or passive losses. When you make an investment in real estate, you are eligible for those passive losses. Me, Chris, other folks that we know that play in this game, we can actually use those passive losses against our ordinary income. So if I make a whole bunch of money selling boats or whatever I might do on the side, I can actually not pay tax selling boats if I have enough of these passive losses from real estate. And for us, it's just been a huge benefit. We bought this asset right here last year. And this particular one, this is actually a screenshot from the tax group that prepared our taxes for it. They gave us 41 cents back for every dollar that we invested in this asset year number one. Imagine that, investing 100 grand and then getting $41,000 of it back year number one, plus getting cash flow from the real estate, plus getting more tax back the second year and the third year and some the fourth year. Like we actually, after about 6 years or so, we get all of our money back in tax savings, plus we get cash flow from this asset for life. This is the power of what's happening. The other big thing that I just want to touch on that's not going to happen to us. Remember when there was the whole debate of Kamala versus Trump, who's better, who's worse? From a fiscal standpoint, Kamala had proposed this whole thing on taxing capital gains, changing the capital gains tax and changing even how it's taxed before you sell. She called it unrealized capital gains. I just want to state for the record for everyone, that is off the table. It is gone. Trump has never said anything like that. So he's all for you going out, investing money, making money on it, and you don't pay a penny of tax until you actually sell the asset. It's very, very important as you calculate, especially when you get into real estate like this. Now, the beautiful thing about what Chris said earlier that Trump will extend is that you can actually use that accelerated depreciation to never pay tax if you're investing in real estate, if it's set up the right way. You can also do something, there's this 4-digit tax code. You guys might know this. If I sell a piece of real estate and I never want to pay tax on it, what is that 4-digit tax code? Type it in the chat. First one gets a book on this. What is that 4-digit tax code where you can sell a piece of real estate and not pay tax?
Lori is fast.
Lori, you are good. Lori, we're going to hook you up with a link. You'll get a copy of one of my favorite books sent to you, shipped right to you. Yeah, it's called the 1031 Exchange. And that whole concept, it was potentially under threat under Biden and potentially under threat under Harris. It's off the table now. Us real estate investors seemingly have the green light to keep doing what we're doing and not pay tax, keep our money reinvesting in real estate over and over and over again. So take advantage of that while you have it. We have this administration at least for the next couple of years. And as I joked and text people this morning, I'm putting my running shoes on, I'm lacing them up. I really meant it. Okay. So the other thing is this. In real estate, I showed you guys this deal earlier, the one that we bought for $492 and we later sold it for $1.7. This particular one, we actually did something called a cash out refinance. Okay. What that means is that we injected cash, $492,000, and then we went to a bank and said, hey, bank, will you put a loan on this property based on the rents and the cash flow? And the bank said, yeah, as long as you can pay the taxes, the mortgage, the insurance, and keep up with maintenance, we'll put a loan on it. So they checked the numbers. They gave us a loan. They gave us all of our cash back. We had 100% of our money back in our hands at this point. And then at that point, we were just collecting cash flow from the property. We still had enough money coming in to pay the taxes, mortgage, insurance, and make dividends to ourselves each month. And so this is something that is also not taxed under this administration. There's no threat of it. At least at this point, there's zero threat of it. So while you have this window of time, I would definitely take advantage of it. This is a huge move. This is a wealth builder. It's one of the hacks that a lot of our really wealthy clients use. They buy assets like this, and then they go to a bank and they refinance it to pull all their cash back, and they keep going over and over and over again. We'll talk more about that in just a little bit. We got so much to cover on this. And by the way, all of your questions that came in, like I see your question, Michael, talking about limiting capital gains. I see questions from Monica about replay, all of those and more, we're going to make sure that we tackle while we're together on this broadcast. Okay, so moral of the story though, right now, single family properties are sitting in this high price category, and commercial properties right now are the real opportunity. Like that's where we're really looking. We believe, based on all the data that we've looked at, that commercial property is going to start going up. I won't bore you with all of this stuff, but I want to draw your attention to this slide. This is for multifamily specifically. You can see the dip in the middle of the graph. That's 2010. If you fast forward all the way to the far right side of the graph, that's right about now. And actually, it's the tail end of last year. They dropped a lot. Multifamily real estate, 30+%. And we're in that dip right now, but we're coming out of it for multifamily. I think office still has a little bit to go. So I wouldn't be buying office right now if I were you, unless you're stealing it. But multifamily, most of the folks that are big in this industry, they all concur that we hit bottom and now there's going to be a race back up, especially with an administration that everybody feels pretty fundamentally safe with. Okay, so that's kind of the market as a whole. Chris, did I miss anything on what we should talk about for forecasting politics and economics?
No, I think that's really good. I would just end by saying that hopefully that really highlights exactly the opportunity in front of us, because we see this as one of the absolute best opportunities. Not only do we have the multifamily market where it's sitting right now with what's happened over the last couple of years, but now looking forward, we see all the benefits that are on the horizon. So we're kind of at that perfect moment right now to be able to capitalize on these things.
Sweet. Okay. Let's talk about funding. We closed the property you see on your screen right here. We literally got this closing done from the day that we engaged the lender to the day of closing was in 10 days. That's fast. That's moving really fast. Many millions of dollars. Okay. How on earth is that possible? Most lenders take 30 to 90 days, some 120. We're going to break that down for you during this next section. We want to make sure that you walk away from this knowing how you can capitalize on deals like this. Okay. So I'm going to skip some of this stuff here. We did a quick intro, but just know this. Of every accomplishment that we've had, all of them, the most important thing that we have around us are the people. And I'm humbled to share this webinar today with Chris Strickland. I mentioned Chris has done over 1,600 real estate deals. This guy's focused right now on really just giving back. So he's here just serving 100%. So as you guys have more questions and we start digging into this stuff, feel free, get them out there. We want to make sure that we take care of you during this broadcast as much as we possibly can in probably about the next hour of time or so. Okay. I'm not as smart as Chris, and I won't pretend to be. I have to study like twice as hard as him. And I feel like a mere mortal. But to give you an example of like the kind of person that I am, I just went elk hunting with my dad and a few team members from our team. And one of the mistakes that we made is that we took horses from Texas to the mountains of Colorado. Like you can see, I didn't think that far ahead on this whole thing. The Texas horses didn't really like climbing altitude in Colorado. And so we were trying to camp up high where the elk were, but one of the horses fell down and got hurt. And anyways, we ended up having to camp really, really low. Well, fast forward on this, my son, my dad, and I, a couple other guys from the camp, were sitting there one morning and we hear a woman screaming, "Help, help, help." And we're like, "Did you hear that? Did you hear that? Help." And we don't know what's going on. Like it's raining out, it's snowing out, it's freezing cold, bitterly cold. We have a little camp set up. So we've got heat and a tent and all that stuff, but with a furnace inside of it. But this woman is screaming for help. Distress can come in a lot of shapes and forms. Distress. I'm going to come back to that woman in just a minute here. What we're talking about mostly today right now, the deals that we're talking are distress deals. It means that there was something that caused them to usually sell cheaper. My definition of a distressed asset would be a property sold at a discount because of an outside force. Okay. There are basically the D's of real estate. Chris, what are the D's of real estate?
Well, let's see. I think I've got a cheat sheet in front of me, but We definitely have debt. You know, people are always falling into debt. The same thing is true when you're talking these larger assets. Divorce, disease. Another way to say disease is just people getting sick. People getting, sometimes they get elderly. As they age and become elderly, then they have sickness and things that they have to deal with from the financial side of that. You do have, destructive weather, all the disasters that we see around the country, not only along the coast, but interior. I live in an area that is susceptible to fires and everything. And then, of course, people are passing away all the time. None of these things are good. We're not saying that. It's just that people face them. These are life things. These are life issues, and because they happen to all of us at one time or another, or at least we know people that they happen to. They're real things that we have a chance to step in and help people out on when they are facing one of these things.
So Chris and I tend to lean, you can go after any of these, but in our humble opinions, the first one, debt causing distress, is the easiest to solve. I'll give you an example. We have friends that do the rehab business. They buy like hurricane damaged properties. They got to go in and they got to gut them. They got to do mold treatment. They got to get contractors involved, and sometimes architects and city permits. And you can do those, certainly, and you can get really good deals, but that's a lot of work. What we prefer is to go after the ones that took out bad debt. Believe it or not, in the commercial real estate world, people don't get 30-year fixed mortgages. Sometimes they get 1-year loans, sometimes 2-year loans, and it's very, very common. And they don't plan ahead of what life will be like, what the policies, what the interest rate will be 2 years down the road, and their loan expires, and then all of a sudden they're up a creek without a paddle. So we're going to focus on debt mostly today because that's where the real opportunity is, and it's super easy to fix. Like, I'm talking, if it's a great property that just has a bad loan, all you got to do is come in with a good loan and you can fix the whole deal. So let's talk about that a little bit. Okay. We talked about the market on this. I want to talk about this deal in particular. This seller, they bought this asset for $5.7 million 2 years ago. They went in with the idea of changing it from a multifamily to an Airbnb for traveling nurses. Probably a decent concept 2 years ago because the market was, kind of red hot with that at that point. But what they did wrong is they took out a bad loan. They took out a loan at a high interest rate that expired in 2 years. They thought that they could have went in and converted the use of this to that traveling nurse Airbnb in that 2-year window, and then got a better loan sometime during that window. But what they learned really quick is that the traveling nurse thing just didn't work. They never exceeded the 50% occupancy mark. Therefore, when they went to banks to try to refinance, banks were saying, no, sorry, you got to be at 90% or more occupancy. That's the going rate for traditional lenders to give a loan. Please type 90%, 90 in the chat. I just want you to remember that. Whenever you're going to the bank, if you want to get a traditional bank loan, they're going to draw the line. They're going to say, if it's not 90%, we're not touching it. That's what traditional banks are going to do. Okay. So these particular sellers, they were stuck and their loan was expiring. They didn't have the multi-million-dollar check where they could just pay off the mortgage. They were about to go in foreclosure. They were going to have a foreclosure on their name. We stepped in and we bought this thing for $3.3 million. We had to pay the closing costs and stuff on top of it. But for $3.3 million, we came in and took over 2 years after they bought it. They thanked us. They were relieved. They got to get out of under this burden. They were living in California. This property happens to be in Memphis. It was just a burden in their mind. They couldn't manage it. And so we stepped into what we would call a killer deal. At our basis price of $3.3 million, we knew it was a home run. All that we have to do, and Chris, this is where you've got some interesting insight, because sometimes people get scared. What if they can't bring it to the finish line? What do you have to say on that, Chris?
Well, I think first of all, just knowing what the options are, what your options are as far as being able to bring it to the finish line is first and foremost. When you have that knowledge of what the possibilities are, then you have a lot better chance of stepping in and being able to do it. And so just knowing that they had no options, their options were out. And so when you have that knowledge of the different possibilities and everything, then you can step in and make something happen.
Yeah, spot on. And a lot of people, they would pass on a deal like this because they don't know the options. They don't know how to fix it. For us, we knew all we had to do is look back in history. We interviewed every property manager in town. We actually found the property manager that used to manage it before they took it over. And we said, hey, what was your occupancy? What were you renting for? And we figured out all we got to do is go back and follow that playbook and we're good. We'll be back at 90% occupancy and we can refinance this thing. So that's what we're in the middle of executing right now as we speak. We just bought this thing and we'll have this thing turned over probably by January, February, back into a regular multifamily property, and we'll be running. Now, the numbers are probably the most important part. Who here gets a little bit nervous on trying to evaluate if it's a good deal or a bad deal? Just put yes in the chat if you get a little bit maybe apprehensive or don't know how to spot if it's the right deal. Put yes in the chat if that kind of gives you a little bit of angst. Okay. I know it does for me early on. It did a lot. Cool, Craig. Cool, Zev. Cool, Kim. Cool, Kimberly and Boris. So here's what we do. If you don't have one of these, you need one of these. You need a tested and true instant underwriting calculator. What we've done, we've reviewed more than 10,000 deals out of our office. We fire off offers almost every single business day because we put it first in this instant underwriting calculator. We've just done this so many times. We know what to look for. We know if the deal is going to be a good deal or a bad deal. Kind of in a live sense, I think this is a copy of one right here. In a live sense, it looks like this. You plug in numbers and it starts spitting out forecasts. You have got to get a couple of different documents from the seller to see what their actual income and expenses are. And then you start plugging in numbers and then you start to figure out what it's going to look like year after year. That's how we measure each and every deal through the instant underwriting calculator. Okay. That gives us the confidence to go in and buy properties like this one. When we pulled the trigger on this distressed asset at $492,000, the seller on this one, they didn't have a debt problem on this one, but they had a problem with the city. They weren't keeping up with repairs. And consequently, the city was about to condemn the property. The owner had owned it for a long time, but was older, wanted to kind of just retire, didn't want to have to deal with all these repairs. And so when we stepped in and bought it for $492,000, we got a really good buy, but the seller was also relieved. He was happy because he didn't have to go through the headache of managing the repairs with the city. We went in, we cleaned it up, and then we did a cash out refinance, which we talked about earlier, got all of our money back, tax free, and then we held on to it as a cash flow building for a while. And then out of nowhere, about a year and a half into ownership, we had a buyer come to us that wanted to buy it for $1.8 million. $1.8 million. Is that the kind of deal that's worth spending our time today? Yes or no in the chat. Do you want to dig into more of those? Because these are the ones that Chris and I like to hunt for. They're not like, most people don't talk about them because they hear words like debt problem or distressed and they get a little bit queasy and they run. But these kinds of deals are the ones that they'll literally move the needle for you financially and from a tax perspective. Yes. Awesome, Bruce. Awesome, Bob. Awesome, Ryan. So let's keep going. Okay. We're going to dig into more of these. Probably the most important thing we need to do today, Chris, though, what we promised is that we go through the funding side. Okay. It's one thing to find the deal, but it's another thing to fund the deal. And a lot of people, this is where they get scared and stop. Okay. How about you listening to this broadcast right now? Does this part trip you up? If we threw that $3 million deal at you that's worth $5 to $7 million, would the funding part at all slow you down? Yes or no in the chat? Yes or no in the chat? Would the funding part make you a little bit tripped up? That's the part that I see a lot of people, they just get, oh, I don't know. So there's basically 6, maybe 7 things we need to hit during this section. We're going to talk about proof of funds. We're going to talk about earnest money. We're going to talk about bridge lenders, talk about debt covered service ratio. And don't worry if you don't know these terms, we have a dictionary that I'll show you how you can get in just a little bit here. It's a fantastic dictionary, and we'll be going through this together, okay? There's stabilized lenders, there's seller financing, and there's assumable loans. Let's dissect these. Proof of funds. Chris, what the heck is proof of funds? POF.
Well, Yeah, POF. So proof of funds. This is just anytime we go to make an offer on any property. I don't care if it's a single family house or multifamily, which we primarily deal with. Anytime we make that offer, the seller or the broker, whoever we're dealing with, maybe both, will want to know that we have the ability to actually purchase the property. They want to know that the time that they spend with us is not going to be wasted time. And so by providing them with a document that shows that we do actually have the funds, the availability to either tap into cash that we have or tap into a loan that we can get or whatever, just the ability to do that and be able to show that we can do that eases their mind and makes them want to talk to us. It allows that gate to open up and allows them to want to talk to us and give us the time of day. So that's the purpose, in my view, of a proof of funds.
So it accompanies that whole offer. Like, just like Chris said, the seller wants to make sure that they're not wasting their time. When you go to submit an offer, or in the commercial world, you first do something that's called a letter of intent, kind of like you see on the screen right now. That letter is something that's delivered to the seller or the seller's broker saying, hey, I have the intent to buy your property. It'll look kind of like this. If you agree to it, we'll turn this into a purchase agreement. Well, along with that letter of intent, they will often say, well, I want the proof of funds. I want to make sure that you have it. So for us, like, we use bank statements. Like, I just use this. I gave this to one of our members, Aaron, the other day, maybe a week or two ago. And he used this as proof of funds for a deal that he's working on, a commercial one. It can be a bank statement. It can be a life insurance like policy showing that there's cash value. It can be a 401k statement. It can be a line of credit. It can be your IRA account. It can be a letter from the bank saying you have access. There's all kinds of ways that it can present itself. But the bottom line is that the seller is going to want to know you've got some ability to come up with cash on this deal. Even if you're taking out a loan for most of it, they want to know that you've got cash for the down payment or whatever part it is. So this proof of funds part, it's a very important part of this business. Okay, we're going to talk more on that in a second. This is Aaron from Canada. Chris has been working with Aaron now for a couple of years. Chris has helped Aaron probably get maybe 7 or 8 deals in some way, shape, or form. Chris has been there guiding him from start to finish on this. But this interesting deal on the screen right here is it's an RV park. Chris, am I saying it right? RV park?
Correct. Yeah.
Okay. So you got RVs coming in and out. You got a manager on site that's managing the turnovers and things like that. Aaron was able to get this one negotiated, seller financed, with only a 5% down payment. So it's pretty cool. It's like a $5 million park, 5% down. That's $250,000 down. But the sticking point, and I listened to his recorded call to give feedback on it. And on the recorded call, the seller was just stuck on, well, I want to see that you've got the 5%. You have to show me you've got the 5%. And so that's where this proof of funds came in handy. And so we scanned this over to him, and then he was able to use it. And that enhanced the conversation to move forward. It's probably why he's got the big grin on his face. He's still working that deal, but it's getting really close. It might be something interesting. How about the next part? Okay. EMD. What is this, Chris?
Yeah. So earnest money deposit. This is where kind of the rubber meets the road. This is where you actually, with the proof of funds, you're just giving them a document or a bank statement showing that, yes, if we move forward, I do have the ability to pay the portion that I need to pay. With earnest money deposit, this is me actually putting money down, depositing it with the title company, whoever's going to close the deal for me, and basically showing the seller that, yes, I am willing to put some cash toward this. I'm serious enough to be able to buy this from you that I will put some money down and secure this deal. The ranges, the amounts can vary, but the important part is that the seller will want to know that you're serious enough to put some money down. So there are really 2 parts to earnest money, in my view. One is that convincing the seller that you're serious enough. The other part is that in most states in the country, just by law, they do require some amount of earnest money to be deposited, just to satisfy the law, just to show that, yes, you are going to exchange some consideration, some valuable consideration in order to secure that deal. It just binds the contract, binds everybody to those contracts.
Back in the Middle Ages, it used to be called an earnest penny or God's silver. That's what they used the term for back in the day. And they had to put down earnest money to buy slaves, essentially. So interesting to see the roots of that word. But for us, you got to have something of valuable consideration. The seller is going to want to see it every single time. On this particular deal, the seller, they were firm on this. This was one of the toughest negotiation points. Usually I can get it around like 50 to 100. This one, they wanted to see $300,000 put in escrow. So that's the amount of the wire that we sent over to the title company to secure that deal. Now, don't worry if you're seeing proof of funds, you're seeing EMD, and you're like, well, hold on, I don't know like how to do that part. We're going to bridge that gap for you before we close this today. Okay, Chris and I figured out a. Oh, sorry, go ahead, Chris.
I'm just wondering, out of the people on here, who has 50 to 100,000 to put down for earnest money? Who has that? Anybody? Maybe that's a too personal of a question to ask, but for most of us, especially if we're just now venturing off into the real estate world, a lot of us, we don't. So, like Nate said, if you do, great. I see a few of you answering my question. I should have said that was rhetorical. I didn't want to call you out on it, but if you do have it, that's fantastic. But if you don't, for those of you that don't, I don't want you to stop listening right now. Like Nate said a second ago, we've actually found a solution for that, even if you do not have that earnest money deposit available in your own bank account.
Yes. And Chris did a beautiful job putting together the whole lending package. So from proof of funds to earnest money to the stabilized lenders, like he put the whole thing together. So hang with us for a little bit. We'll show you that on the start to finish. Okay. Next one I want to hit on is lender limitations, because even if we put you in contact with our people, the people that Chris put together in this package, they're going to have limitations. They're going to say, well, hey, I can do this, I can do that. And so we need to talk about what those lender limits are. The first one I already gave you. I'm going to do a test question and we're going to give away a book. We're going to test your retention. What percentage occupancy do most lenders require that you have? Oh, wow. We got a good group here, Chris.
That's awesome.
Wow. Jeff, you were on it. Scott was right behind you. Kim, you almost had it too. Anya, yeah, 90%. Okay. So the book goes to Jeff. Jeff,
all right,
you
Jeff,
have.
I'm going to send you a direct message, Jeff. Be on the lookout for it.
So that's the first criteria. Most traditional lenders, they're going to say, well, hey, it's got to be 90% occupied. I'll tell you right now, that beautiful building in Memphis that we took over, it was not 90%. It was closer to 50%. So that means traditional lenders are out. Okay. The other one that we're going to hit in just a couple of minutes is, what is the debt coverage? Meaning when the mortgage payment needs to leave the bank account, how much rent is coming in that will cover all the expenses? We'll cover that one in just a minute, but let's continue to solve the problem of a property that doesn't have 90% occupancy, because sometimes distressed deals don't have that occupancy level. So there's a concept called a bridge lender. You can see that beautiful Golden Gate Bridge right there. Bridge lenders, they help you get from one side to the other. They're meant to be short-term. They're treated almost as cash. Literally, the deal that we mentioned earlier, that Memphis one, we closed that one in 10 days. We had a bridge lender for part of it, and then we brought cash to the table for the rest of it. But they closed it because they knew it was a good deal, number one. And number two, they knew it was a short-term deal. And short-term lenders are everywhere out there. I'm not talking about hard money. I want to make a very big distinction, because a lot of people make the mistake. I remember early in my career, this is going back to 2007, 2008, I used a hard money lender to buy 6449 Shield Drive in Woodbury, Minnesota. And I bought that property, I cleaned it up, and I sold it, and I made a little bit of money. But what I realized is that the lender made most of the money because they were a hard money lender. So we're not encouraging everybody here to run out to a hard money lender. That's not the solution. There's actual bridge lenders. They kind of serve an in-between, and their rates are usually in between. They're much more reasonable. You can actually get a deal done and leave some profit in your pocket at the end of it. So they do charge a little bit higher rates. You can expect anywhere between 8% and 11%. It's kind of just par for the course. And they close really, really fast. Anything else you'd throw in on bridge lenders, Chris?
No, I think that's pretty accurate. I like what you said there about just it is different than hard money. So when you're going after a bridge loan, you want to make sure you're talking to the right person.
Yeah. And there's a lot of these folks that are out there. We're going to give you one as part of our little package we're putting together for you. So just stay tuned for that in a second. But like, just get with a group that you really like, one that you can count on, and that they close when they say they're going to close. That's the most important thing. Because if you're making a promise to a seller that you can bail them out of their situation, a lot of those sellers really count on those deadlines. So you need to make sure you got a lender that can match that. Let's talk about a stabilized lender. You would probably think of this as just a regular bank, credit union, Wells Fargo, PNC, US Bank. They all do these kinds of loans, but it's for a stabilized property, meaning it's already rented out. It exceeds the 90% line. What you can expect from them is that they're going to give you the best rates. Nowadays, it's somewhere between 5%. Like we get around 5% because we have tier 1 borrower status directly with Fannie Mae, and we've got a lot of experience, but somewhere between 5% and probably 7% for a stabilized property. Okay. And so those are good rates right now. And your terms are probably going to be somewhere between 5 years and 15 years fixed. You're likely not going to get a 30-year mortgage on a commercial piece of real estate. You can still get 30 years on a single family, but really, really hard on a commercial piece of real estate. I would be happy if I locked a 10-year loan at a really good interest rate right now. That's like the sweet spot. Okay. The other thing is that they'll usually do about 75% of whatever it appraises for. They don't want to do 100%. They're going to make you come with some money to the table. That's usually how it goes. The exception is if you happen to buy it really, really low, sometimes they might let you go a little bit higher on or decrease your down payment, I should say. But usually 75%, that's kind of the sweet spot. So, Chris, anything else I should add on regular old-fashioned financing?
You're good. You're good. So I guess I'll ask you, pose you a question.
Yeah.
So you said they'll go, 5 to 15 years. One of the reasons that the more recent that a lot of the people are getting into lending problems right now, that they're losing some of their multifamilies, is because they were taking out really, really short loans. Even though they're short loans, in this case 5 to 15, what you're talking about, the amortization, what kind of amortization are they looking at?
Yeah. So the last one we took finance.
It can vary, but
Yeah. Anywhere from 20 years to 25 is the typical commercial amortization schedule.
so I just want people to understand that the loan itself is going to balloon, right? You're going to balloon at 5 years or 15 years or somewhere in between, but it will be amortized or spread out as if it were going to be probably a 20 or 25-year loan.
So in 10-year-old talk, I'm going to remember, Chris is smarter than me. So I'm going to break it down to 10-year-old talk. What that means is that your payment is not going to be based on a tight 5-year window. Your payment's still going to be small because it's based on a 25-year schedule. The balloon just means that at the end of that time period, 5 years, 10 years, whatever it is, you'll have to either sell the property or go to a different bank and refinance the property. So that's very common in commercial. If you get 10-year loans, like that's kind of the sweet spot. A lot of people, they'll ride it for 9 years or 7 years, whatever it is, and they'll wait until the interest rates are in a low interest rate environment, and then they'll refinance all of their commercial properties when the rates are down, and they'll lock for another 10 years. And that's usually the game that's played with commercial real estate. Or you can sell, or you can just pay it off, whatever you choose. So Chris asked the question for refinance or initial loans. I'm going to kind of go back on that for a second, and then we're going to go start to finish on the next deal. We've had a couple requests for that. So stabilized lenders will do it either way. They'll either come in, if you've got 90% occupancy, you've got a healthy amount of income coming in, the property doesn't need a bunch of renovation work, it's like turnkey. Stabilized lenders will come in with you right from day number one, as long as you've got around a 25% down payment and they can prove it out with the numbers. Okay. They'll also come in with you. Let's just say like you bought the $3.3 million deal, that one that was 50% occupied. You could go in with cash or a bridge lender and get it to that point, get it to stabilization, get it to 90% occupancy. And then you go see the regular stabilized lender and do a refinance. Their rules are usually about the same. It's about 75% of whatever it appraises for, they'll give you as cash or as a loan amount on the property. That's the general threshold. There is an underlying number we need to talk about to make sure that they can do that, though. And it's coming up in just a minute. It's called debt coverage service ratio. So it can work for both. Okay. Donald said NOI. That's a very important number as well, Donald. Okay. So let's cover this one start to finish. Okay. We have a guy on our team that his sole job is to go out there and talk with owners of buildings. This particular one in Georgetown, Kentucky, which is a suburb of Lexington, Kentucky, he went out and started basically, I don't know if you want to call it door knocking, but he started calling on owner records of people that have bought properties sometime 5+ years ago who are sitting on their asset, haven't sold in a while. And he started talking to this seller about 2 years ago. And this seller kind of went back and forth with us and gave us some ridiculous numbers, and none of those numbers worked. And we finally came to the point this year, we just closed this one about 6, maybe 7 weeks ago. We kind of finally came to a point where we said, hey, look, when you sell, like, what's your motivation? What do you want to do next? He said, well, I don't want to pay tax on this, and I don't really know where to park the money. I want to have something for my kids. And we're like, well, do your kids really want to manage the property? No, they don't want to manage the property. And so what we structured with the seller is something called seller financing. The seller's distress on this one is that they wanted to retire, but they didn't want to get hit with taxes, and they didn't want to give up the income stream. So sometimes distress comes in a different form. You can't always, like, we're talking about the D's, the divorce, the destructive weather, and the debt. This particular one wasn't one of those. This is more the seller wanted to retire, but still wanted to retain the income and didn't want the tax burden on his shoulders. So pay attention to this part. We structured with the seller to pay the seller 4% interest on the property. That means that he signed the deed over to us, and instead of him getting a bunch of cash from us, he took a mortgage on the property. He became the bank. We signed it, he became the bank, and we're now making him 4% per month interest payments on this loan. We've got the next 5 years of payments like this. Imagine that. If you got a deal like this that cash flowed really well, because it's great positive cash flow for us, and this beautiful brick building in a Class B area surrounded by multi-million-dollar estates, like literally it's in that kind of neighborhood, would you take this deal? I know you haven't seen all the numbers, but if you got to structure 4% seller financing, would you go after it? Yes or no in the chat? Yeah, absolutely. Nice, Carrie. Yeah, nice, Dwayne. And so we did. So sometimes distress comes in a little different form, and I just want to like make you aware of that. Okay. So how do we get this one? This one was by sending someone on our team to literally go out there and call all the owners of real estate. And he cold called on this one, and it worked out in our favor and in the seller's favor. The other deal, the big one in Memphis, I'll come back to it a different slide. That one, the seller, we looked up loans that were expiring. It's all public information. Real estate's such a beautiful thing. We looked up loans that were expiring, and we saw that one was taken out a couple years ago, and it was about to expire, and we reached out to that seller. So there's a lot of ways that you can do it, but that's just two as an example. Here's another one. Who here knows what an assumable loan is? Put a yes in the chat if you know what an assumable loan is. I just want, if you don't, put a no in the chat. I want to get a feel of how deep we should go on this one. If you know assumable, put yes in the chat. If you don't, then put a no. Okay, so we're half and half so far. Ryan says no. Okay. Assumable works like this. Very common in commercial real estate. Not as common in single family houses, but they're still out there. Assumable means I take out the loan today. 3 years from today, I have a life event. I'm moving, I'm retiring, who knows what it is. Chris comes to me and says, hey, I want to buy your property. But rates today are too high. When you took out that loan 3 years ago, rates were great. I don't want to go to the bank and take out a 5 or a 7% loan. I just want to take over your existing loan. If I took out a loan that had a clause in it that said it was assumable, Chris could step in and take over that loan. He'd have to submit some paperwork to the bank and make the bank happy and all that kind of stuff. But as long as there's an assumable clause in it, he could take over that loan with the bank's approval. And so that's what we did on this one. The seller on it, he wanted a certain number. He wanted out. He wanted to retire. Him and his group were just done, up there in age. And so we came in and said, you know what, if we can buy this with your existing loan, we're in. And so that's what we did. We assumed the seller's loan at 4.3% interest. This was right in the middle. This is about a year ago now. It was right in the middle of those rates that just kept going up and up and up and up. And so when we locked this one at 4.3%, we all had a little bit of celebration over here, because you can't get 4.3% right now. It's not physically possible to go out there and get one unless you assume someone's existing loan. So this is another powerful play to watch for as you're out there doing financing on these. Okay. And by the way, let me just ask, do you guys think that there's a lot of assumable loan potential out there? Yes or no in the chat. Do you think that there's potential for everybody here on this broadcast right now? Do you think that there's potential for assumable loans out there? I love it. You guys are awesome. Yeah. You guys have good belief. Chris, we got an excellent group today.
This is fantastic. Yes.
Yeah. Yep. And Joan's asking about, what if it says it's not assumable? If it says it's not assumable and you need to assume the loans, then just don't look at it. But there are a ton of assumable loans. In fact, I think when we get together next, we've got another broadcast. We'll go through it, how to find those, because they're a honey hole for people that'll do it. Bruce says, well, how many years were left on the assumable loan? Do we need to be aware of that? Yes, absolutely. You have to be aware of it. You just ask the seller, hey, can you give me your mortgage statement? Give me your copy of the mortgage you signed on closing day. If they don't have it because they lost it, you can always call the lender with them on the phone, and their lender can produce a copy of it too. So yeah, you obviously want to know how many years are left on it. I think we have 5, maybe 6 years left on that assumable loan. So that's good for us. We'll refinance it, or we'll sell the property if we can't refi.
I like Bruce's way of thinking. That's fantastic. Great question.
Yeah. Yeah. And so, yeah, it was some were 5+ for us, Bruce. That's when we get into a deal, we want to make sure that it's like we have a healthy runway to do whatever we want to do to the property. If the loan was expiring in 6 months, not so much a deal that I'm going to get excited about, because we're going to have to immediately go to a bank and start a refinance conversation, all that kind of stuff. Okay. I mentioned this earlier, but I want to really drill this point home. Okay. When you can do, it's called a cash out refinance. These are tax-free moves. When you can do this in real estate, you produce a product, like you find a killer deal that you can buy and then go to a bank and then refinance it and get all of your money back. You produce something that you will have investors throwing money at you for. This particular deal right here, we put it out to our investors and we took in $3.5 million in 8 business days. Okay, the lender took 10 days to close. We took 8 days to raise the money that we needed as down payment. It came in so fast. And it's because of this. Let me ask you this question. If I invest $100,000 into a deal like this, and at the end of the year, I get $10,000 back as my income, what is my rate of return? What's my ROI? I invest $100,000 and I get $10,000 back. What is my rate of return at the end of that year? I invest 100 and I get 10 grand back. What is my rate of return at the end of that year? Kim, nailed it. 10%. You guys are awesome. You guys are good. Okay. What if on that same property, I invested 100 grand. At the end of the year, I got all of my 100 grand back, plus I got the 10,000. What is my rate of return then? I got all of my 100 back and I got 10,000. Scott, I like your wording. Infinite. Bruce says infinite. Kim says 110. And I know if you're typing this in on a financial calculator, it's not going to say infinite. That doesn't pop up, I promise, but it's probably going to say 110. What about this? I get all my money back year 1 plus 10 grand of rents. Year number 2, rents go up on the building. I get 12 grand back. Year number 3, rents go up again. I get 13 grand back. I already got all my money back earlier, year number 1, but now I'm getting 10, 12, 13. And then year number 4, I get 14. Year number 5, I get $15,000. What is my rate of return then? What is my rate of return then?
Bruce got it.
Yeah.
Kim.
This is the part where most people miss. I know when I say the word distressed, it scares people. Like if you were really honest with me, and if I said foreclosure, forbearance, short sale, what is the feeling you get in your gut? What's the first word that comes to your mind when I say those words? Foreclosure, forbearance, short sale, bank mitigated sale, vacancy, scary, concern,
Concern,
Kim.
scary. Yeah.
And here's the beauty.
Drama.
90 drama, yes. Kim says opportunity.
Oh yeah.
So 90% of the market does the same. So what that means for you as an investor is you've eliminated 90% of your competition. 90% of it. And you don't have to take the hurricane damage properties. You can take the ones that just took out bad bank loans. You fix the loan, look for a good property and get a good loan on it, and you can win really fast. And consequently, God has blessed us to be able to do these infinite return deals. We've done this over and over and over again. I've had the blessing and privilege of refinancing over 300 properties, not because I'm some genius, I'm not. I'm just an average guy from Duluth, Minnesota. My dad was a mechanic. My mom did home daycare. I took horses from Texas to Colorado. Okay, I'm not that smart, not as smart as Chris at least, but this has changed my life 100%. This whole distress asset advantage, it's changed my life. When that lady was screaming, help, 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 I saw my dad. He immediately sprung into action. It was like he was born for this moment. He sprung into action. He jumped up out of the tent, started looking and listening for the help. And here comes in this lady onto the edge of our like kind of where we were camping down by the river. And she's shivering, she's freezing, like totally disoriented, obviously hypothermic. And my dad immediately rips off his jacket, throws his jacket around her, brings her into the tent. And then some of the other guys started helping her too. And we're trying to ask questions to figure out who she was. And my dad's, he's given orders. He's telling my son, this is his grandson, Bianco. He's saying, hey, press that SOS button. We got this little GPS thing that sends out SOS messages. Press that SOS button, get people out here now, right away. Get her clothes off. She needs to get into a sleeping bag dry. She can't have any wet clothes. And like, I'm just watching all this happen. And I don't know why I wasn't smart enough to think about that we needed horses that could have got us to the top of the mountain, but I'm pretty convinced that God had different plans for us. What if we wouldn't have been camped at the bottom of the mountain by the river for that lady? What if we would have been at the top of the mountain instead? Would that lady have made it? I don't know. Sometimes in life, these distress situations can come up. This woman, thank God, she was able to regain consciousness after about 7, maybe 8 hours, getting some food in her body and getting warm. She came back to, and we were able to help her get into town. I don't have all the answers on it, but I know this, these distress situations in life, it depends on how you handle them. Depends on where you are in life, how you act. And I got to see something really special. That was just a couple of weeks ago with my dad and my son and a bunch of guys from our team that we got to be part of that. Here's what I want to do. I want to switch over to questions. We've got a lot more stuff that we can cover, but I want to switch over to questions because I want to make sure that we can handle this. But is it okay with you if Chris and I tell you about a 2-day event that we're going to do next week, literally Friday and Saturday? Is it okay if we spend a couple of minutes just talking about that? Those of you that want to learn more and really dive deep with us, is it okay if we spend a couple of minutes and talk about that? Yeah. Okay.
Awesome.
Awesome. So let's jump into that. So it's called the Distressed Asset Advantage Masterclass. And it works like this. It's 2 days on Zoom. You don't have to travel. It's literally Friday and Saturday, a week, not this Friday and Saturday, but a week from now. Okay. You get replays of this. So if you're like, well, Nate, I can't make Friday, but I can make Saturday. Cool. Awesome. There's replays available for 90 days. Why 90 days? Because we know that the market will continue to change. We want to make sure this content is relevant to you. Those of you that come and you take action on this, you'll be able to see exactly what we're doing inside of our business right now. So the way that it works is this. It's a 2-day masterclass that literally, this should save you thousands of dollars when you go through it with us, because you're going to avoid making a whole bunch of mistakes. Chris and I have been in this game now for nearly 20 years. We've made the mistakes. This will save you at least 5 years of your life, because we're just going to share what's working right now, what we're running after. And so when I put $7,500 of value on the screen, I literally mean it. We're not charging anywhere near that, but it's worth that much. Okay. The 2-day includes how to find these deals at huge discounts so you can score your next general wealth opportunity. It also includes deeper on the section of how to fund these deals. We're going to include for you a funding kit. So literally what that means, when Chris was talking about someone that can help you maybe cover the earnest money, or maybe come in with the bridge loan, or come in with proof of funds, we've got that resource. How many here would like to have that resource sent to you today? Literally can cover your earnest money, can cover your proof of funds, lender available. This is something that we've worked on for years to put together. How many would like that right now? Yeah, awesome. Awesome. So the way that works, we've literally gone out and curated this list of lenders that do this for people. And then Chris has personally reached out and touched base. I've used most of these people on this list, and Chris has went out and refreshed the folks that are able to do the proof of funds and the EMD, the earnest money deposits. We have that so that you don't have to get stuck. Instead, you're not bound by whatever's in your bank account. Instead, you can go out and use other people's money to help bridge some of the stuff in the beginning. Okay. Next one, after the fast funding toolkit, is something that we call the primer book. Now, this is only available for the first 15 people. I'll put up a little tracker in just a second so you can see who the 15 people are that come in for it. But if you want to be more of an expert in this arena, if you want to be able to know what to say, when to say it, how to say it, and have that knowledge at the tip of your tongue before you start conversing with other people, this is for you. Okay. It's adjusted to your needs. You never have to go too fast. It's a $250 value, but if you want that knowledge in advance, then this is the book you should start with. You can get a copy of this today. That book looks like this right here. Oh, I got the wrong one. This one, the primer. And so there's interactive videos in it. Chris, did I get the right one?
Yep, that's it.
Yeah.
You got it.
Cool. There's interactive videos in it. This will get you prepped even before the event. It's a quick read, but it's very dense so that you can actually get the knowledge that you need and you can sound smart when you're talking to other people. The next one is a session workbook. This is the ultimate blueprint for those of you that like to take notes as you go and you want to be able to come back and have everything in one spot. This is the ultimate blueprint for you. It's a $100 value, but it's easy, fill in the blank guide. It's going to save you a lot of time on your real estate journey. Okay. So that's that one right there. Pops up on the screen. The next one is the instant underwriter calculator. Who here wants our calculator? Put yes in the chat if you'd like a copy of our calculator. This is one that we perfected over the last 10,000 deals that we reviewed. We bought countless. We're literally, God's blessed us. We've done over 1,000 real estate deals here out of our office. We've spent a lot of time in this spreadsheet and we continue to upgrade it. Almost every year it gets some major upgrades to it. And so that calculator, it's worth at least $500. It's probably worth more than that, but it's something that was previously only available to our premium clients who pay us $10,000 or more. We're including it with this. We just want you to have it up front. If you've got deals that you're looking at between now and the event, put them through this calculator. Bring them to the event. Let's talk about them while we're there. Chris and I are doing 2 Q&A sessions, one at the end of each day, Friday and Saturday, live with you so that we can answer any question you have. If you want to go through your deal, we'll go through your deal with you as well. Okay. The next one is the Dictionary of Multifamily Terms, $25 value. This thing is going to let you basically run faster without getting stumped. If you are worried about some of the terms we've talked about today and you want to make sure that you can have them and not get stumped by other people, this dictionary will help you out a lot. The dictionary, oh, well, I lost the dictionary photo. That's okay. I'll keep going here. You might even have it, but so yeah, that's that. Next thing is that just to make sure that this is risk-free for you, we're going to give you a gift card for the Home Invest store. Okay. The total price for this, by the way, it's worth way more than $11,000. We know that, but its total price for you today is $247. To make this risk-free for you, literally, you pay the $247. and you get equal credit inside the Home Invest store. So what does that mean? That means if you like things like this Home Invest shirt that I'm wearing, if you like to have things like tools to take out in the field with you, like this clipboard, Chris designed this. This is beautiful. It's literally the step-by-step process of what we do when we're on site talking to the seller of a piece of real estate. If you're wondering like, oh my goodness, what do I say? How do I say it? You just look at the seller and say, hey, seller, do you mind if I go through my checklist as we go through this appointment? I want to make sure that I don't miss anything. 100% of the time, I've had sellers say, yeah, you go ahead. We also had it printed on a water bottle. We've got all kinds of cool stuff like this. The main thing we want you to know is that like you've got real tangible things that you can take away too. You've got tools that you can use in the field. Chris and I don't do this for the 247 bucks. I promise you that. God bless us very, very well. We do very well with our real estate. We have a nonprofit. It's called Home Invest Kids. I don't have enough time to cover what we do there, but we're helping defeat some of the world's problems that are out there. Right now, 24% of American kids don't have dad at home. That leads to poverty. It leads to drug use, leads to teen suicide. We're trying to tackle some of those problems with our nonprofit. So most of the work that we do with this education goes to benefit really good causes. So, but at the end of the day, we wanted to make this a no-brainer for you. 247 bucks. You come, you get everything that you see here. Plus, on top of that, you get to pick out some goodies from the Home Invest store to help you on your real estate journey. So with that said, I'm going to flip it over for questions. Chris, I know you've got some of them already fielded. We can go back and forth on them. And then I'm going to keep tracking here as people are signing up. I want to make sure that I track it. So right now we're at 7. Welcome, Quill. We've got Julie's in, Terry's in. Awesome, guys. Welcome, welcome. I'll come back to this in a little bit, but we're taking the first 15 to get all of the bonuses that are in this. So I'll come back to this in a little bit too. Chris, what questions do we want to start with?
I think I'll start with Jeff's that just popped up on the screen. He says, what are those dates one more time? And so for those of you that are wondering or maybe missed those dates, it is not this Friday and Saturday, but a week from now on November 15th and 16th. So Friday and Saturday next week, November 15th and 16th. And as Nate mentioned, if you can only come to part of it live, then you will have the recording. So please don't let that, stop you or anything, because we want you to get the value of all that. So yeah, Nate, we've been getting some really, really good questions. We've gotten some live in the chat today. We've also gotten some, I know many of you filled out questions ahead of time. And so let's dive into some of those. Some of these Nate has gone over. I think maybe putting it into perspective of your question and what Nate covered earlier. One of the questions that we're seeing quite a bit of, how do I work with banks? And Nate, I'm going to rephrase that just a little bit because I feel like this might be something that some people are out there thinking. And that is, Nate, I've never done any of this. I don't know what in the world I'm doing. Why would a bank talk to me about buying a 24-unit apartment building?
Yeah, great question. So credibility, I'm going to circle back on this in a second. Credibility. And those of you that were looking for the link, Philip dropped it in the chat. If you're following us on social media right now and you don't see a link, just type the word link in the comments, L-I-N-K link, and then our team will get it over to you at pronto time. But credibility is what this kind of comes down to. The reason that a seller asks for proof of funds or earnest money is they want to know that you're credible to close. They want to make sure that it's not going to be a waste of their time. The bank is not much different. The bank is going to be looking for 2 things. Number 1, well, 3. First thing is, does the property make sense? They're going to send an appraiser out. They're going to look at the numbers, all that kind of stuff. Property's got to make sense. The second thing is they're going to look at you as an individual. They're going to say, well, hey, if everything goes haywire, does this person have the ability to do this deal financially? Okay. The third thing they'll look at, and this is you or your team, is they're going to say, well, does this person or does this team, do they have the experience to do this? Now, commercial real estate is a team sport. The reason that Aaron Neville, our Canadian nurse, he's a nurse up in Canada that does real estate part-time, did 7 or so deals under Chris's leadership. The reason that he's doing deals, number one, it's his own grit. He's out there making it happen. But then number two, when he gets stuck on some of these credibility pieces, he's able to lean on the team. And so that's why Chris put together that funding kit. That's why we do trainings like this. That's why sometimes we open up opportunities for people to partner with us on deals. We put that out there for people so that they're able to basically borrow someone else's credibility. Now, if you're like, well, hey, Nate and Chris, I really want to do it on my own. I don't want to do it with you guys. That's cool. We're fine with that. Then what you do if you don't have the experience or if you don't have the money that the bank would require, then you want to find a partner that could fill that gap. And there are a ton out there. I won't call anybody out, but earlier on this training, Chris asked the question, hey, who could write a check like that? That wasn't an intentional question for this, but a lot of people said, hey, I could write that check. And if I ask the question, I'll do it rhetorically here. If a killer deal was on the line and someone came to you and said, hey, will you consider partnering with me? Would you partner with them if you had the money for it? Would you consider it? And most often that answer is yes. If the person feels like the deal's good and they can trust you, then a lot of people will jump forward. This all starts with getting the killer deal. Some people will ask us, well, hey, should I go get the money first or should I get the deal? The deal is what brings the money. The deal is the money magnet. Type that in the chat for me. The deal is the money magnet. Never forget that. For a long time in my life, I didn't understand that concept. I stayed frozen like, oh, I don't have the money. I don't have the money. I was working a job at Target. I was a Target executive working way too many hours trying to do real estate on the side. And wasn't getting it clicking because I didn't have enough money. And then I finally realized that the deal is the money magnet. When you find a killer deal, money comes to it. Chris, that was a long answer to your question, but did we answer it?
I think that's perfect. Yes, because these people, especially on the commercial, and this is something if you've never dealt with commercial versus single family, then especially on the commercial, your lenders are going to be more concerned with how the asset itself is going to repay the loan rather than you. You have to bring your credibility, but they really are interested in the asset. So finding that killer deal is super, super important. And it actually kind of goes along with our next question, Nate. Now, we haven't touched too much on this in this specific session. I'll just say that the 2-day, we will touch on this a lot more. So if you're really interested in a deep dive on this, then be sure and join us on the 2-day. But Nate, the question is, Phil asked, I'm interested in auction properties, and your video to get you to sign up showed that you will be able to find properties before they go to auction. He's interested in learning that. So I know today we're primarily talking about funding, Nate, but if we were to give a little bit of information on that, then what would we say to Phil?
Yeah, great question, Phil. So what you're calling before auction, the term in the industry is called pre-auction, and pre-auction is very, very normal. In fact, Chris and I will cover that at the event. We'll show you how we took down a deal pre-auction in the last couple of months. The high level is this: you find the auction site, you call the listing broker, and you say, hey, I'm interested in this asset. Would the seller be willing to sell pre-auction? Pre-auction. And then what will happen is sometimes the broker will say, no way. We've already got too much money invested, blah, blah, blah. And I have the script to bust through that. It'd take too long to cover now. But if they say that, okay, whatever. But some of them will just automatically say, yeah, we would consider pre-auction terms. What'd you have in mind? And then you start negotiating. I prefer pre-auction because during an auction, you are bound by some pretty terrible terms. AKA no inspection period, earnest money wired the day before the inspection, or your credit card on file so that they can hit it the day of bidding. A lot of times you have to post bids. Like if you're going to bid 500,000 or $1 million, you have to have a certain percentage of that already wired into their bank account or their trust account. And so I don't like terms like that. I would much rather have a proper due diligence period. So I would always aim for pre-auction. It's always worth the phone call. It's always worth trying to bust through that conversation. And we have a script for that we'll cover at the 2-day event too. That's a great question. It's a great way to score killer deals right now.
Yeah, absolutely. So we have another question here that's talking about the spread. Earl asked a question about, well, what kind of spread are we looking for on the deals and everything? I'll say that from my perspective, that's one of the reasons that I love the instant calculator, is because I get to look and see what my numbers look like. So I primarily am going to focus on a few different metrics. I'm going to look at, obviously, how much per month we're going to be able to make, or per year. I'm also going to look at what kind of a rate of return or cap rate I'm going to be seeing. And then I'm also going to look at the rate of return based on the amount of cash that I put into a deal. We call that the cash on cash return. And so those are three of the metrics. There are certainly others, but those are three of the metrics that we really look at. And so the instant calculator is going to be able to show us what those are. All I've got to do is go in and plug in those numbers, and it'll do those calculations for me. So that will help to take care of what kind of a spread we would be seeing with the property. And then either I'm going to be able to pursue it, or I'm not going to know, okay, it doesn't quite meet my numbers or my metrics right now. What kind of an offer would I need to make in order for it to meet my numbers? And so then I can start to play with my offer price and see if we can make an offer that will make this a doable deal. So hope that helps there, Earl. I also see here, Nate, that Bruce asked a question before we lose it here. Can the instant calculator be used for more than multifamily? Can it be used for triplex, duplex, and single family too? So it can certainly be used for all multifamily properties. It's built for multifamily. And so you can see that it takes things out not only for today's numbers, but it takes it out and looks at future numbers. We typically call those pro forma numbers. And so what will happen if we get it all rented out? What will happen if we're able to raise rents and things like that? But for those of you, because I've had this question already 2 or 3 times in the chat today, for those of you that are looking at single family, we actually do have a separate single family calculator as well. So we do have both of those. And the other one really is built more for single family. So you would probably want to use those separately, but we can certainly hook you up with that.
Chris, I'm just give a quick update, Chris, just so people know where we're at. So I just want to welcome Bruce. I want to welcome Jennifer. Congrats. And I also want to welcome Jeffrey coming in. And if you see another thing pop up when you're checking out that says tax workshop, that's the workshop that we did, literally going through all the tax saving moves of this industry. If you want to potentially eliminate your income tax or at least reduce it drastically, then that tax workshop is very helpful for you too. So welcome, you guys. That's 10 of the 15 spots are taken. So there's only 5 spots left to get all of the bonuses. Okay. Sorry, Chris, we can keep going.
Yeah. Thank you. Thank you for that update. That's good. All right. Next question. Matthew is asking, how do I analyze markets to find out which one to invest in? Nate, how would you point him in that direction?
Yeah. So real estate is, a lot of people will say, well, hey, what metro should I invest in? And on a broad scale, Chris and I will give you some answers. We're actually going to bring Ashton Shumway to the event. Ashton is an expert deal analyst. This guy has analyzed more deals than probably Chris and I together. I'm not sure of that, but like he's analyzed a lot of multifamily specifically. He did it for a really big fund, and now we recruited him and he's on our team. And what he always talks about is, number one, you have to have population growth and job growth. You can get a bad asset if it's in a good market. If it's in a good market, you're going to win because you got people moving in, which is going to drive rents up. Jobs and population got to be growing. Now, when you're in a city, you have to pay attention, because it's not just like I can say, well, Phoenix fits that. Phoenix is growing. Phoenix has jobs and its population. Well, North Phoenix is very different than South Phoenix. East is very different than West. Scottsdale, which is a suburb of Phoenix, is very different than Phoenix proper. So you can't just make a blanket statement and say, yeah, this is what I'm going after. you really have to drill into the macroeconomics. You have to understand what's happening in the local area. So on a big scale, I would look for jobs. I would look for population growth. If it were me, I'd be investing in states that are more business friendly. We don't want to go all political after one of the most intense elections in our lifetime. But the reality is that some of the states that they would call blue states, they had trouble for landlords during COVID. Literally, I owned a bunch of rentals in Milwaukee, Wisconsin during COVID, and they were telling landlords, no rent check for you. I had on our Airbnb properties, I had some tenants that had future reservations reaching out saying, oh, I need to cancel, I can't travel. And I remember calling my banker, Julie May, and I said, hey, Julie, I'm getting a lot of cancellations on my property. Is it okay if, we don't pay the mortgage for a while? And she said, ha ha, Nate, very funny. And I still paid the mortgage, obviously. She knew that I was good for it. But at the end of the day, like sometimes blue states, they could have more challenges, at least for some of the owners. I'm not saying don't invest. I'm not saying that it's bad, negative, you can't make money, because I know a lot of people that make money in blue states. But as a whole, if you want more predictable returns, I would lean towards red states. Nowadays, we invest in 7 different markets. I live personally in Florida. I don't live in all the states that we invest in, but because of property managers, because of online technology, you can invest anywhere in the United States of America that you want. So I hope that helps. It also needs a little bit of macroeconomics drill down in the local area too.
I love that answer. And I think that that's super, super important. I will just add from my perspective. I think that Nate is giving you fantastic direction on just some of the, probably the better markets to be in. But I want to drive home also that there are deals almost everywhere. One of the things that I found, I've had the fortune to travel this country. I think at this point taught real estate courses or invested in about 43 or 44 different states. And I've been in nearly every market, at least every major market in the country. And one of my fears used to be, am I going to get here on the ground? And am I going to be able to show the people that paid me to come in and teach them, am I going to be able to show them some deals right here? And I used to have that fear. It used to be at the forefront of my mind all of the time. And what I found after going to all the markets, small markets, big markets, tough markets, easy markets, is that there are deals. If you think back to those distressed Ds that Nate shared with us at the beginning, if you think about those, there are people that are facing illness, right? Disease, facing debt, facing, unfortunately, death or the death of a loved one, and all the others. They're facing that in every place in this country. And so just keep in mind, you can find deals everywhere. Take that along with what Nate is sharing and say, okay, I'm going to focus in on some of these markets that are going to be favorable to landlords, and I am really going to get busy looking for these deals. So thank you for that, Nate. By the way, I just want to give a little announcement. For those of you that are signing up, there is a link that's not working in your sign up to get some of the tools to download and everything. We do have Philip, one of our specialists, looking into that. So I just want everyone to know that we will get that fixed. So make sure you stick with us on that. All right. I think we've just got 1 or 2 more questions. Nate. Oh, here's one from James. Is it expensive? Talking about the course. I'll just say from my perspective, Nate, you and I both, man, how many tens of thousands of dollars have we spent on our own education over the years? Education is not expensive if you apply it. Nate is a fantastic example of going out, learning something, and then applying it and doing it. And so $250, I don't want to say that it's not very much money, because $250 is $250. That being said, I want you to know that we're going to put everything we can into those 2 days, all the energy that we have into those 2 days, so that you leave those 2 days thinking, I can do this. This is something that I can do. I can find properties. I'm going to know how to fund these properties. I'm going to know how to manage these properties. And so we're going to put absolutely everything we can into those 2 days. Nate, anything you want to add to that?
So I went through, Zoom user says, you're right, education isn't expensive if you need it. Yeah. Ralph says worth every penny. Thank you, Ralph. Ralph is someone that's been through most of our trainings, and appreciate your support and being here too, man.
Thank you, Ralph.
Yeah. Chris and I, actually, that's the way that we met. Chris and I both went through, there was an educator about, I don't know, 20 years ago that used to do real estate. He doesn't anymore, named Dean Graciosi. He does more like motivation, courage type stuff now, but he used to do real estate. And Chris and I both went through that program, and we both excelled as students of the program. And then he asked us both to go speak on his behalf. So Chris and I met traveling the country together, speaking on stages. And that was our first run. And we got to learn and meet one another because we were out there speaking, helping other new people on their journey. And education changed my life. If I didn't go through that, I would still be at Target, more than likely, maybe a different company, but I was working a corporate job. I did what mom and dad said, go to school, get a good job. And I was trying to climb the corporate ladder. But once I discovered that I could actually do this real estate stuff, everything changed. Like it's blessed us in so many ways. I won't have time to go through all of it right now, but probably the biggest way is that we're able to donate to places that we can actually make an impact. My wife was able to, she wanted to start a nonprofit called Home Invest Kids. Now we're able to help fatherless youth. We're able to make an impact in the world. We're able to do the things that light us up inside. And so I don't know what it is for you that lights you up. Maybe it's not paying so much to the IRS and taxes. We teach a lot about that. Maybe it's you want to pass money down to the next generation. Maybe you want cash flow. I'm not sure what it is, but real estate unlocks so many things. And the fact that we're walking into the administration that we are right now, I believe the next 2 years is the time to run, grab as much as you possibly can. I don't know what it will look like 2 years from now. Remember, last time Trump was in office, from 17 to 19, 2017 to 2019, he had all three branches of Congress and the House of Representatives and Senate, all three branches were on the same political side of the aisle. Love it or hate it, that's what happened. And they got so many tax proposals through. They got so many economic policies through. And I believe that that's what's happening right now. But 2 years from today, that could change. He could lose the Senate, he could lose the House, and then they get into gridlock and they fight like they always do. Right now, he has a clean sweep. At least that's what it looks like. So I believe that real estate's probably going to be the best investment possible for the next 2 years. And the fact that commercial prices are down, this is the time to grab it. If you want, we're waiting for that generational property, grab it right now. Chris, if I could, Casman, I'll talk about the woman at the campsite. Thanks for bringing that back for me. I'll talk about her. Let me just recap this because I know some people have to go. I'm going to recap this and then I have to go after not too long here. I got a call. I got to get on. But this is what's going down next Friday and Saturday, not this week, but next week, 15th and 16th of this month. This will be the only time left that we do this year. You can't ask me for another date because both Chris and I have so much to do. We've got a lot of travel. We're speaking at Mega Success in just a couple of weeks. Like it is a very, very busy stretch from now to the end of the year. But next Friday and Saturday, we have carved out the day to just pour into you. Okay. Friday and Saturday, here's what you get. You get a virtual masterclass with us. We're literally going to go through and show you how to find these, how to fund these, and then how to manage these long-term. Okay. So that's happening. We're going to do Q&A sessions at the event. So whatever questions you have, like bring your deal, bring whatever you're stuck on, bring that to this event. Let's talk about it while we're there. The value for this is at least sorry, go ahead, Chris.
Sorry, I just wanted to point out to them, we'll even bring them up. We'll talk back and forth, not just answering their question that they type in, but we'll bring them up. We'll make it a good back and forth.
Agreed. Agreed. Chris and I will be spotlighting you guys so that we can actually talk back and forth. This is worth every penny that we're putting on. The total price for this is $247. This will save you thousands of dollars, probably just the first half hour of this. In fact, we start with something called the round of fire, and we're just going to be spitting out fire right out of the gate to make sure that you get value and everybody agrees that you got more than what you paid for out of it. The next thing is that we have a fast funding toolkit. What this is, it's $1,000 value, but it's going to get you at least 200 hours back. That's 4 weeks of your life. We're going to give you right up front because we did the research. We called the banks. We built the relationships. You get all of it handed to you right up front. And if you would like to have your earnest money covered by somebody else or your proof of funds covered by somebody else, can you just put a yes in the chat? I know a lot of people get tripped up on that. Like, well, what if the seller wants proof of funds for $1 million? If you had a resource that could do that for you anytime you needed it, put yes in the chat if that sounds appealing to you. Because Chris put that together. You will get that today. You'll have that coming into the event next week. So when we teach you how to find these deals next week, you've got that resource already at your fingertips. Okay, cool. We've got the proof of funds letter, the EMD, the stabilized lenders, the bridge lenders. We've got it all. These are not normal banks. You're not going to find them on your own. We've done the heavy lifting for you on this. Okay. The next one is the primer book. Now, this is for the first 15 people only. I should actually quick check on that where we're at right now. So Jeffrey, there might have been a problem with the link after Jeffrey, but this is the last little stretch. If you were going to do it, then now's your window to do it. But I got you in there, Jeffrey. I got you in there, Jennifer. I got you in there, Bruce. The primary book is for the first 15 only. If you want to sound smart, talking to investors, talking to sellers, talking to lenders, and you want the knowledge ahead of time, even before the event starts next week, then this book is for you, okay? That primer book, the team took a lot of time to put it together. It's literally got videos that interact with it back and forth. This is all designed to get you up to speed so that you can sound smart and feel smart walking into this business right from day number one. I know I tripped on my words a lot in the early days, and it probably cost me some potential deals, but not anymore. Now you got this resource at your fingertips ready to go. You also get the session workbook. What the workbook is, literally it's fill in the blank as you go. Instead of having to like take notes in an unorganized fashion, you'll have a beautiful format for you to fill in the blanks and then a resource for you to come back to. It's we put the value on this, I think, at $100. It's worth way more than that, but literally this is the tool that you'll probably come back to for years to come. It's beautiful, and it's something you can work on during the event while we're together, okay? The next one is the instant underwriting calculator. This thing is like pure power for underwriting numbers. There's a couple of documents that we're going to teach you how to get from the seller. You import those documents into these sections right here. And then this thing just starts to come to life. It'll start to tell you what it's going to look like year 1, year 2, year 3. It's going to help you measure. Remember that term I told you guys earlier, debt covered service ratio? It's going to measure that. It's going to tell you if the deal makes sense for a lender, if the deal makes sense for an investor. It's going to tell you how much cash down payment you'd have to bring to the table. All of that and more is inside this calculator. For the $247 price that we charge for this event, this calculator covers that and then some. Okay, we'll be going through more of the mechanics of it at the event together too. So that thing is a gem. Previously, we only gave that to people that were premium clients with us, people that paid us $10,000 or more. We're giving that to everybody that signs up right now. Okay. Next one is the Dictionary of Multifamily Terms, $25 value. If you need to look up anything, if you're like, I don't want to sound silly, you flip open the dictionary and you got the answer. We compiled it really nicely for you. It's just easy to use, ready to go, right at your fingertips. And then to make this completely risk-free for everyone, you also get a $247 gift card. The total price is $247. You get a gift card for $247 to use at the Home Invest store. Chris, do you have that physical clipboard or the workbook or anything that you can hold up just so we can show people?
If I can do it with this virtual background.
Chris, you designed this. What is the purpose of this?
So, so many times we find ourselves in situations where we're talking to a seller and we just Sometimes we just need a pattern to follow. Just what do I need to hit during this conversation? One of the things that I have found is that I like to approach things very casually. I like to build a little bit of rapport and everything. But if I'm not careful, then I'll get off on a, sidetracked and everything. The clipboard and this process, this checklist is to keep me on track. I still want to have the casual conversations. My personality does that, wants to have that, but I still have to remember to hit the parts of my conversation to find out about the property and find out how I can help this seller. I still need to stay on track with that. And that's the purpose of having this clipboard with me when I go and talk to people.
It's a beautiful tool. And literally you can do it open book with the seller. You can just say, hey, seller, do you mind if I follow this checklist? Chris also had it printed on a water bottle. This isn't the actual water bottle right here, but he had it printed on a water bottle. So if you don't want to carry a clipboard, carry the water bottle and then just set that on the table as you talk with the seller and to say, hey, do you mind if I follow the checklist? This has helped so many of our members be able to have an articulate conversation with sellers and not get lost. I don't know about you, but sometimes I get nervous when I'm doing something new for the first time. And so this is just the guide that's going to walk you through the whole conversation and will obviously teach you how to use it as well. Oh,
yep.
$247. It covers you coming to the Home Invest store and getting nifty tools like that. If you like sweatshirts like this, they give you a nice professional branded look. You can buy sweatshirts, you can buy hats, all kinds of stuff in there. It's just to make it totally risk-free for you. And you get to keep everything that we're talking about. So now's your window to sign up. The link is in the chat. Philip put it there. There's only a couple spots left for getting all of the bonuses and getting that primer book. And I think we got probably 2 more questions that I saw, Chris. We'll tackle those and we'll probably wrap this up.
Perfect. Let's see here. I was answering a couple of other questions, so I might have missed those questions above. If we do a bridge loan, so Jennifer's asking, if we do a bridge loan, what are the requirements to refinance and get money back out? So cash out refinance, basically.
Yeah. So if you went to like a regular bank, not the bank that Chris and I are going to give you, the regular bank is going to say, well, yeah, you got to own it for 2 years. It's called title seasoning, or a year minimum. They'll say you got to own it for at least a year, got to be title seasoned. And we don't work with those kinds of banks, because if you buy a distressed deal and you get it rented at the right level, you should be able to refinance immediately. So we searched high and low to find those banks. And that's part of what that bank lender list that we're giving you, it has the banks that we're using right now for it. They don't care how long you've owned it. You could do it in a day. Okay. You could do it in a month, whatever time period you want. The second thing that's important is that you would like the loan to be primarily based on the assets, less you. Okay. Some lenders, they underwrite you first and then the asset. You want to switch that around. You want them to underwrite the property and then you as a secondary. Okay. That's kind of a key for it. But if I do the bridge loan, what requirements do I want to get the refinance? I would make sure that the day that I buy it, I have a clear path to get to 90% occupancy. Bridge lenders don't care what the occupancy is. It could be 0%. They might make you put a bigger down payment down, but they don't really care. They just want to see you quickly get in and get out. So I would make sure that whatever occupancy you're taking it over at, that you have a clear path to get to 100%. How do you do that? Chris and I will cover more of that at the 2-day event. It's really all about having the right property management team. Okay. We interview all property managers in the market. We usually hire one for a while and then we replace them with our own employee on site. We'll talk more about that at the event. So have a clear path. Number 2, what is the debt coverage service ratio? It's a big word. I'm sorry, that's not a 10-year-old term, but it simply means this. When that monthly income comes in, how much of it is going out to expenses? And is there enough to cover all the expenses and cover the lender and then have some left over? They usually want a ratio of about 1.25, meaning 1 would cover all the expenses, the mortgage, the tax, the insurance. Anything above 1 would be extra cushion. There's more money coming into the bank account. 1.25 is kind of the starting line. If you can get it to 1.5, you got a nice deal. Lenders get more excited about that. Okay. And then the third thing is they're going to want to do an appraisal. They're going to send an appraiser out there. They're going to study the market. They're going to drive it off of this term called NOI. Stands for net operating income. It's just the net income of the property. We got a property we showed you guys a little bit earlier. It brings in 61 grand per month. That's the gross income. It's a beautiful thing, but there's also $40,000 worth of expenses per month on that property. So 60,000 minus, or 61,000 minus 40, we're left with like $21,000 net income per month. The appraiser wants that number because they're going to look at the other buildings in the area and they're going to say, well, hey, other buildings that are bringing in 21 grand per month, what do they sell for? What were they trading at? What is their value? And they'll give a value of your building based on your net operating income. The good news about that is that you can improve that. You're not stuck with a bad valuation. You might get let's just say you get an appraisal that you don't like. All you got to do is get in there and increase the rents, improve the property. It might take you a year or so to do it, but you can bring the value to whatever you want within reasonable limits naturally. But you're going to increase the rents to whatever the market will allow, and you can force the value up. Those are the three big ones, Jennifer, that we'll be talking a lot more about at the 2-day events, that when you're taking a bridge loan or regular financing that you're going to have to watch out for.
Awesome. Nate, this has been fantastic. Thank you so much. One other thing that I will mention, just kind of a housekeeping thing, for those of you that have signed up, which by the way, we've had a couple of others sign up, Alton, Lucy, great to have you all on board, Jeff. I know, Nate mentioned Jeff and Jennifer and Bruce and the others. Great to have y'all. Looking forward to having you in next week. From a housekeeping standpoint, a few of you have been asking questions. When do I get this document? When do I get this book? And things like that Nate is showing is a part of all this. Some of those are going to be emailed to you immediately. Other parts of those items will be emailed to you throughout this week and everything, just so that we don't overload you and dump everything on you at one time. So just be aware that you are going to be seeing all of the rest of those coming to you throughout the course of the week. And by the time the event starts next week, we're going to have everything accessible on one page and everything. That way, again, you don't get overloaded to begin with. All right. I think, do we have anything else, Nate?
Brian asks, what is debt covered service ratio required? We might have hit this one, but I'll just chip at it one more angle. So usually the lender wants to see a 1.25 or more debt covered service ratio. That just means that if all of the income that came into the bank was 100 grand per month, the loan payment, the taxes, the insurance, it better be less than 100 grand. It should be closer to like $85,000. That way there's coverage to cover all payments, plus have some cushion left over. And lenders will look at that 100% of the time. They're always going to ask for the rent roll. They're going to want to go through the expenses. They will always ask for that. So just be prepared for it. If you're using our instant underwriting calculator, that number is really easy to find. It's row. Let me show it really quick, just so I don't mess it up. Okay, you guys can play with this between now and the event, and then we'll go through this more at the event too. You come in and you'll see right here, there's debt services, principal, interest, DSCR, line 42. And it tells you, like, this asset that I just did an example one, year number one, it's 0.08. A traditional lender won't take a 0.08. They'll take a 1.6. They'll take a 1.25 or more, but they won't take 0.08. So this would mean that I have to use a bridge lender in the beginning. And then year number two, I could refinance with a traditional lender, 1.6, 1.9. You can see the DSCR just starts to skyrocket. If you get above 1.25, lenders start getting more appetite for it. If you get above 1.5, lenders start jumping for the deal. If you get to 2.0, you'll have multiple lenders competing for the deal almost every single time. So these properties are very, very powerful, especially after you get the rents boosted a little bit. Cool.
Awesome. All right, Nate, thank you so much. Appreciate this. This has been fantastic. And for those of you that have signed up, we're really looking forward to next week with you and everything. Any final announcements or anything?
Yeah. Hey, looking forward to working with you guys Friday and Saturday next week. Once we close this Zoom window, all the links go away. So if this was something on your mind, click the link right now and then make sure you take care of it sometime today. But as soon as we close the Zoom window, all of them just disappear. If you're following us on Facebook, Instagram, or any other social media platform, then if you don't see the link, just type the word link in the comments and our team will hook you up with the link. I see a couple people were on social media that got on there too. To just put link in the comments, and that's how you get the link off of social media. This presidential election change, combined with the Fed potentially cutting rates tomorrow, Thursday, this could open up one of the best times in history for investing. Don't let it pass you by. Pay attention to it. Try to take advantage of it. Generational opportunities are out there. With that said, I'm out. I'm going to go get ready for my call, Chris.
Awesome. Thank you, Nate. Thanks, everyone. Appreciate y'all being here. Go ahead and click the link right now before the window shuts, and you can take a look at it afterwards and make your decisions. Thanks, everyone. See you later.